Welcome to our last video in our series about bad TikTok tax advice. If you missed the first two, check them out. There are some doozies in there. Today's videos revolve around the tempting idea of writing off leisure vehicles and second homes on your taxes.
I purchased a boat one time, and before I purchased the boat, I thought, can I write the boat off? Can I take clients out? So I bought a large boat. That boat had a kitchen, and it had a bathroom in it, and you could sleep on it. Well, lo and behold, the IRS tax code says that if you have an RV, a motor home, a boat, and you can sleep in it, eat and cook in it, and you can bathe and shower in it, lobby dog, you can call that a second home. It saved me $4,500 a year because I was able to use it as a second home.
So his advice is, if you can sleep, bathe, and eat in a boat or camper that you purchased, then you can write that off as a second home. While the IRS will count a boat or camper as a residence if it has a place for cooking, sleeping, and using the restroom, you cannot write off these homes in full. If you're using it as a residence and not renting it out, you can deduct your mortgage interest with limits and your property taxes if applicable, but you cannot deduct the full purchase price or even your mortgage payments. Another caveat, if it is your residence and you work out of it as well, the IRS says it's too small to have any space that's regularly and exclusively used for business, so you can't take a home office deduction.
So can you buy a beach house or a mountain cabin and write the entire thing off plus it be completely legal? You can. Here's how. So if you own a business and are an S corporation, this one's for you. You can buy a condo at a beach, mountain in the hills, or a ski chalet and use it for business purposes. Not only write the entire mortgage off, but deduct all of your expenses. Let's say you pay the house off in the next 10 years and then you want to claim it for personal use. You can do so without any tax consequence. Just make sure that you use it for business purposes, events, retreats, and also that you allow your employees to use it more days than you use it as an owner. There are, of course, a few rules that you need to follow. However, you can make this 100% tax deductible. And as always, make sure to consult with your state and your tax pro to make sure that your business structure can take advantage of this incredible deduction. It almost seems illegal, but it's not.
This is a good one. She's saying that if you have an S corp, buy a beach house or other vacation home, then use the home for business purposes so you can write off the mortgage payments and deduct all your monthly expenses. The problem here lies in the fact that in order to write off or deduct anything for your business, those deductions need to be deemed ordinary and necessary for your line of work. For instance, my CPA firm wouldn't be able to write off a beach house because it's not necessary and definitely not ordinary for a CPA firm. Now, if we needed to rent an event space by the beach for a client meeting or an employee retreat, sure, that would work. On a related note, if you're thinking about buying a second home and using it as a rental or investment property, your taxes will look very different than when talking about a property you're using only as a residence. I'll link a couple blog posts that you might find helpful when figuring it all out. But that wraps up our series on bad TikTok tax advice. I hope you've learned at least one piece of info that you can take to the bank. I've certainly had a fun time sharing these with you. If you're already signed up for my email list, keep your eye out on your email. I've been working on something I'm so excited to share with you. If you aren't, there's a link in the description where you can sign up so you don't miss out.